Opening Bell is sponsored by C3.ai. This is Enterprise AI.
Lots of red ink on the market this morning, especially the Nasdaq down about 200 points. We'll get to big tech a little later. But now look at Bitcoin. Moments ago, it dropped below $50,000 per coin. It's right at 50 grand as we speak. I want to bring in David Nicholas, wealth management kind of guy. I'm going to come at this a different way, David. How do I buy Bitcoin without actually buying Bitcoin itself?
Yeah, it's a great question, Stuart. I mean, it seems like everywhere you turn, people are talking about Bitcoin. They want to buy it. But if you're looking at Bitcoin right now and it's trading at $50,000 a coin, you may be saying, you're crazy. I'm not going to jump in at these levels. So there are some indirect ways that you can do it. You can buy financial companies that are owning Bitcoin, companies like PayPal, companies like Square. We own PayPal. PayPal introduced Bitcoin to their platform. Their user engagement jumped 50%. You can buy non-financial companies. We've been talking about Tesla as owning Bitcoin. MicroStrategy, a software company, they now own Bitcoin. Both their prices have done well. But I like earnings. One of my favorite ways to own it indirectly is by owning the mining companies that are mining for Bitcoin, because their earnings are directly related to the price of Bitcoin. We own Riot for our clients. As Bitcoin price goes up, mining companies' earnings will go up as well. So those are some ways that you can indirectly benefit from that exposure.
Well, hold on a second. I see Riot Blockchain, which is the underlying technology for Bitcoin. They're down $10 this morning. They're at $60 per share, pre-market down 14%. I mean, if you go anywhere near Bitcoin, and you're going to have extraordinary volatility, aren't you?
It's a great point. Absolutely. This is not for the faint of heart. You've got to have the right risk tolerance to invest in anything that's related to Bitcoin. But look at a company like Riot. We pay $20 a share roughly for our clients. It's trading up around $60 a share. It's seen a massive run up. So I think any pullbacks like this, if you've got the risk tolerance, it could be a good buying opportunity.
All right, real fast. We can see a lot of spending coming down the pike. You can see it a mile off, 1.9 trillion, et cetera, et cetera. How do you play on the stock market this wave of spending that's coming right at us?
Yeah, absolutely. My big thing right now is infrastructure. If you look at the ETF REMX, which is a rare metals ETF, things up over 30% year to date. With the amount of infrastructure that's needed for ailing bridges and roads and infrastructure, we're going to need a lot of construction spending. You're going to need metals for that. We love our electric cars. Guess what? We're going to need metals. So between infrastructure spending, electric cars, even getting off of some of the oil that we're trying to move to a clean energy type dependency, guess what? Oils, energy, materials and metals are all going to do well this year, in my opinion. That's the best way to play it from an additional spending standpoint.
REMX. Got it. David Nicholas, thanks very much for joining.